When you think about it, it's quite impressive that President Trump has made 5 changes to Social Security this year. And a lot of it is to put more money in the pockets of seniors. Now, here's the thing, a lot of seniors are not aware of some of these changes, quite because some of it are fairly recent and did not make the news. Others are changes that the media did not cover the way they cover other changes that we've seen this year. So a lot of seniors are simply not aware that these are supposed to put more money in your pocket. So what I'm going to do today is I'm going to explain what these 5 changes are for 2025. And if you're a low income senior, stay tuned. I am going to talk about 3 more changes that the president is considering for the rest of the year that would increase your benefits. I am also going to talk about the $6,000 tax deduction that was part of the big beautiful bill that is creating a lot of confusion. So what I'm going to do is I'm going to explain it and then give you 3 scenarios, like 3 real world scenarios that will give you an idea of how you can take that deduction if you are eligible for it. And then finally, stay tuned to the end of this video because there are Medicare changes that are coming. We are almost about to enter open enrollment. You need to know what these changes are because they directly impact your benefits. Hello, my name is Kwame Kwade. I am a government benefits expert. I have been helping seniors get the retirement benefits they deserve for 15 years. I cover Social Security, Medicare, Medicaid, food stamps, and any personal finance issue that affects seniors both in and out of Congress. So if you are new here, welcome. I'm glad you're here. Do me a favor, go into the comments and let me know your city and your states. And if you've been watching this channel for a while, I am also glad you are here. So there is a lot to cover. So let's get to the 5 changes that President Trump has made to Social Security already in 2025 that put money in your pocket. Now, the first one is the biggest one. You may have heard already because it came with the big, beautiful bill. It is a $6,000 tax deduction, which I am going to explain in detail how you can claim that deduction and give you some real world scenario. I'm going to give you 3 examples of how that is going to work in the real world if you make less than the threshold and if you make more money than the threshold and how that is going to impact your bottom line. So that is the biggest one. It is a $6,000 tax deduction. Now, a lot of you will be thinking, why is that important? Well, it's because it helps you stack deductions. So the first thing is that if you file your taxes and you are, eligible to file taxes because you make more money in Social Security and other income, then your taxable income has 3 different opportunities for you to claim deduction. The first one is the standard deduction that everybody is entitled to. And then there's another deduction that only seniors are eligible for. So if you are a single filer or head of the household, age 65 plus, there's a $2,000 additional deduction for seniors that was already in place before the big beautiful bill. If you are married and you're filing jointly, it's 16. If you're married, and filing separately, is $1,600 per qualifying spouse, age 65 plus. And then if you're married and filing jointly, is $3,200, which is 1,600 times 2. So before the big beautiful bill went into effect, seniors already had this extra bonus deduction on top of the standard deduction, $2,000 as a single filer or head of household. If you're married filing separately, you had $1,600 for a qualifying spouse. And if you're filing jointly, you had $3,200. That was already there. Now, with the big beautiful bill, you get an additional $6,000 in deduction if you are age 65 plus. So there's 3 opportunities to stack money tax deductions on top of each other and get the best deduction for you. So I'm going to explain, as I mentioned, real world scenarios on how you can do this to benefit you, or if you're filing jointly, to benefit you and your family. Now, let's get to the second big change that happened this year. Over 3 million seniors were impacted by the Social Security Fairness Act. What is this? Well, it gave you $6,000 lump sum payment if you were part of the 3 million people that were impacted by the WEP or the GPO, which prevented some public sector workers from getting their full Social Security benefits. So starting in January this year, you got a retroactive payment for a year that gave you about $6,000 lump sum. And then in addition to that, you got a $360 to $1,150 increase in your Social Security benefits. That affected 3 million seniors. So that is the second big change. And the Social Security Administration just announced that they have completely paid everybody that was impacted by the Social Security Fairness Act. If you have received your lump sum payment and your bonus increase, great. If you haven't, then you need to call the Social Security Administration, because according to their records, they have sent the money to everybody that was eligible. The third change that happened this year for Social Security was the cost of living adjustment. Now, that was a 2.5% increase that increased your benefits by $40, in some cases up to $50 per check. Now, I have to admit, that was less than a lot of seniors were expecting, especially since prices have gone up and stayed up for a lot of goods and services. So it is one of the changes that the president made this year that a lot of seniors are disappointed by, the 2.5% COLA increase. I'm going to talk about a bill that is currently circulating in Congress that is going to fix that. So stay tuned till the end of this video. I am going to explain what is being done, or the proposal on the table that the president is considering, in order to increase your cost of living adjustment and make sure that it doesn't fall below a certain threshold going forward. So that is exciting news. It's going to put more money in your pocket. So that was the third change that happened this year. Now, the fourth one is happening on September the 30th. Now, this one is probably going to cause some people a lot of unhappiness, because they are switching everybody to digital payment. So if you're on Social Security benefits and you're currently getting your Social Security benefits by paper check in the mail, starting in September the 30th, you can no longer get a check in the mail. You have to switch to electronic payments. So let me tell you what's going to happen and what you need to do right now. If you are getting paper checks, or you know somebody that is getting paper checks, you need to send this video to them, because their benefits are going to be stopped. The mail is not going to be delivered anymore. You are not going to get a paper check, because everybody is supposed to move to electronic payment by September the 30th, 2025. So let me explain your options. You either have to go open a bank account with your local bank or credit union, and have the Social Security Administration send your payment to that bank. Or if you are unable, or for whatever reason you cannot get access to a bank account, your other option is to get what they call a direct express debit card. This is a debit card that is backed by the United States Treasury Department, that allows you to get your government benefits by electronic payment. So if you're currently getting your Social Security benefits by electronic payment, and you're paying all these bank fees and they're kind of eating into your payment, you can sign up for a direct express debit card and have your federal benefits transferred to that card. And the direct express card acts as a regular debit card. So the only difference is that it can only be used to receive federal payments, federal benefit payments, Social Security, veterans payments, etc., etc. So if you know somebody that's getting paper checks for their Social Security benefits, let them know that starting September the 30th, they can no longer get paper checks. Everybody has to go electronic. This is part of an executive order that the president signed, and now it's been implemented. And so, there are very, very few exceptions. You have to be 104 years old. And I mean that. You have to be 104 years old to be exempted from getting electronic payments. And then there are three categories of people that could still get paper checks. And it's a very narrow group of people. And You can no longer get exemptions to paper check with the Social Security Administration. You have to apply through the United States Treasury Department. So the president and the Treasury Department are determined to stop sending paper checks to seniors. They want to send you electronic payments. You either have to open a bank account and have Social Security send your money to the bank account, or you get a direct express debit card, which is a debit card that is backed by the United States Treasury Department. Those are your two options. So that is the fourth change that has happened this year. And as I mentioned, if you are a low income senior and you probably feel like all these changes, especially the Social Security increases, has not benefited you, stay tuned. I have three changes currently that are before Congress that are being considered that could put more money in your pocket. So stay tuned for that. But before I go any further, I want to let you know that our partner, Chapter Medicare, is here to help you with your Medicare needs. And I am going to talk in detail about this. A lot of seniors do not realize that you get more money from Medicare in your lifetime than you get from Social Security. There are seniors that get into a situation where you have to get a particular surgery and it's $30,000. And that is probably even more than you get in your Social Security benefits all year. So, maximizing your Medicare and getting into the right plan is very critical. It is not something to just ignore because over your lifetime, you get more out of Medicare than you get out of Social Security in terms of money. So, I'm going to explain how our partner chapter can help you get into the right Medicare plan. So stay tuned. There's also a link in the description of this video or the number on your screen that you can call, and they will put you in the right plan that is better for you. 90% of all seniors are in the wrong Medicare plan. So I'll get to that in a second. But let's talk about the fifth change to Social Security that President Trump has implemented this year. The fifth one is Social Security overpayment. Now, here is what happens with overpayments. About 3 million seniors each year end up owing Social Security money. And if you haven't experienced overpayment, stay tuned because I'm going to explain. Because if it happens to you, it is not a pleasant thing. So typically, if you are getting Social Security benefits before your full retirement age and you're working, there is an income threshold that above which your Social Security benefits is supposed to be reduced. If you're on disability benefits and you start to work again, or you're in the trial work period, there is an income threshold that you cannot exceed. Otherwise, your disability benefits is going to be jeopardized. What happens is that people make more money than the threshold, and they either don't report it to the Social Security Administration, or they report it and the Social Security Administration just does not get to that paperwork to reduce their benefits. And so this goes on for months or sometimes years. And then the Social Security Administration gets information from the Treasury Department, from the IRS, saying that you made all this money. And then the Social Security Administration realizes that you were paid more money than you were eligible for. And then what do? They stop your benefits. They stop sending you your Social Security checks, and they're now going to use your check to pay for all the money you owe until your payment is done. So recently, it was just the Biden administration changed that to 10%. And then recently, it has been changed to 100%. And then now the Trump administration has changed it again to 50%. So what does that all mean? It means that if you owe the Social Security Administration in 2025, half of your Social Security or disability check is going to be taken and used to pay back the money you owe until it is paid off. So that is a new change that you need to be aware of, because if you end up getting that letter, that dreaded letter from the Social Security Administration that you owe money, earlier this year, they announced that they're going to take your entire Social Security check and use it to pay back the money you owe. Now they changed their mind, and now they're only going to take 50% of your check. That is still a lot of money. And so if you are not sure whether you owe the Social Security Administration money, it's probably a good idea to call them and find out, especially if you are getting Social Security before your full retirement age, you're working, or you're getting disability benefits and you've been working. It's just a good practice to check to make sure that you don't owe them any money and that they are making the appropriate deductions or reduction in your benefits if you are making a certain amount of money, because you don't want to wait for months to go by or for years to go by and then get hit with an overpayment letter. That is going to cause you financial stress, because that overpayment letter means that 50% of your Social Security check or 50% of your disability check is going to be taken and used to pay back the money that you owe until it's paid off. So you do not want to get into an overpayment situation. So the second thing I want to talk to you about is some of the big changes that happen in the Big Beautiful Bill that is causing a lot of seniors confusion. And so I'm going to explain to you what is happening with the $6,000 deduction. I'm going to explain to you what the deduction means and how you can claim the maximum out of it. And I'm talking about the Big Beautiful Bill $6,000 deduction. But first, let's talk about the elephant in the room. A lot of seniors are reading online that President Trump has eliminated taxes on Social Security. Is that true? Well, technically, that is not accurate, because only about 80% of seniors are going to see a temporary reduction in their Social Security taxes for the next 3 years. It only is going to last while the president is in office. So, if you remember, the president promised no taxes on Social Security, no taxes on tips, no taxes on overtime. Well, the no taxes on overtime portion made it into the bill. So if you are working and you get overtime, you can deduct the first 12,500. And if you make a certain amount of income, you are not eligible for the overtime deduction. But that's a whole separate video. If you work and you get tips, the first $25,000 in tips is tax deductible. And that is also going to last for the next 3 years. So all those changes are lasting while the president is in office. The no taxes on Social Security did not make it into the bill because, due to Senate rules, they could not include it in the reconciliation bill. So the next best thing they did was to pass this $6,000 deduction. So the $6,000 deduction applies to seniors age 65 and older. And here's how it's going to work. So who qualifies for this? Well, anyone over age 65 is eligible. If you are filing single, you get to deduct $6,000. And if you're married filing jointly, you get $12,000. Now, as I mentioned, this is only going to last from 2025 to 2028 once the president leaves office. And then after that, we're going to return to how things were before the Big Beautiful Bill, where up to 85% of Social Security tax income was eligible for taxes. Your combined income, 85%. So this $6,000 tax deduction, as I mentioned before, is stackable. It means that you can stack it on the standard deduction and the existing senior deduction, which I explained earlier. There is an existing senior deduction on top of the regular standard deduction. And so if you claim the standard deduction and you're a senior over age 65, you can then claim a $2,000 deduction if you're filing single. And if you're filing married by filing separately, you claim $1,600. And if you are married filing jointly, you claim $3,200. So those are two deductions that are available to seniors already: the standard deduction and then the bonus deduction. And now there's a third deduction, that is the $6,000 that was included in the Big Beautiful Bill. And so that is what I want to explain to you, how that works, and then give you 3 real world scenarios of how, depending on your income, that tax deduction is going to apply to you. So it's a $6,000 deduction if your income is $75,000 or less. So if you make less than $75,000, you will be able to deduct this fully. And then if your income is between 75,000 and 175,000, then your deduction, it decreases. So you don't get the entire 6,000. It decreases as your income goes up. And then if you make more than 175,000, it's completely gone. You don't get any of the 6,000 deduction. Now, if you're married filing jointly and you make $150,000 or less, you get the full deduction. But if your income is between 150,000 and 250,000, your deduction begins to phase out. And then if you make more than 250,000 as a couple filing jointly, then you don't get any at all. So basically, if you're married and you make between 150 to 250, you get less. And if you made more than 250,000, you don't get any of the 6,000 deduction, the 12,000 at all. So let's look at a scenario if you are a single income filer. Okay, if you file single, and let's say that you make $125,000, it means that in the end, you are only going to be able to deduct $3,000. Why? Because if you make more than $75,000, for every $1,000 over the 75, you are losing $60. So that's an easy math that I wanted to help you with. So if you are wondering whether you are eligible for the deduction and you're a senior citizen and you're probably in the middle income or a little, upper middle income category, and you're trying to think about what can I deduct, here's a very easy way to think about it. If you make more than $75,000, every $1,000 you go over the 75, you lose $60 in deduction. So if you make 125,000, you're making 50,000 over the threshold. And so that 50,000 reduces your deduction from 6,000 to 3,000. You can only deduct 3,000 because of your high income. Now, if you're married, filing jointly, and you're both age 65 and older, here is how the math is going to work for you. Let's say that you make $200,000. Then you are $50,000 over the limit. And so for every $1,000 you go over the limit as a joint couple, you lose $120, $60 per couple. And so since you make $50,000 more, you are going to end up losing half of your deductions. So instead of getting a $12,000 deduction, you are now going to get a $6,000 deduction, because for every $1,000 that you go over the $150,000 limit, you lose $120 in deduction. I wanted to give you a very simple math so that you can think about it, so that you can do your own calculations, because you know your income situation and you know how much you may be over the threshold. And so for every $1,000 you go over as a couple, you lose $120. For every $1,000 you go over as a single filer, you lose $60. Now, let's say that your income is 200,000, but only one spouse qualifies, then you can only deduct $6,000. And so essentially what they did is that they phased out the tax deduction above a certain threshold, and it kind of went down all the way to 250,000. If you are married and filing jointly, then you lose all the benefits. So that's the question I've been getting from people, because when they read the bill, they just said that if you make more than 75,000 as an individual, it phases out. If you make 150,000 as a couple, it phases out. But they don't explain how the whole thing worked. So I went and read the bill again and then did some research, and now I'm bringing you real world scenarios to help you understand how this all works. So I hope that is very helpful to you. Now, let me talk very quickly about Medicare before I get into the 3 Social Security changes for low-income households that are about to happen this year that will put more money in your pocket. And then after that, I have Medicare changes that are happening that you don't want to miss because open enrollment is going to happen soon. And you need to be aware of these changes so that you are prepared for them. So let me talk about Medicare back again. Here is the thing, and give me just 90 seconds and I'll wrap this up because I think this is important information. As I mentioned, seniors get more money out of Medicare than Social Security because healthcare costs are expensive. But if you're in the wrong plan, then you are left with putting money out of your pocket to pay for things that Medicare should have covered. 90% of all seniors are in the wrong Medicare plan because there are 24,000 plans to sort through. And it's going to cost you money and cost you your health if you are in the wrong plan. That's why the Trump administration has been suing Medicare providers that have been misleading seniors and putting them into the wrong plan and costing seniors a lot of money. Well, our partner chapter was founded because of a similar experience where one of their co-founders watched his parents get taken advantage of, got into the wrong plan, paid hundreds of dollars in Medicare fees they shouldn't have paid. And that was one of the motivations for them to start this company. And so far, we've sent about over 2,000 of our viewers to chapter, 2,000 viewers that have gone to chapter for help. Sorry, I didn't mean to do that. And have been able to get help with their Medicare plan. So the advice is free. It is unbiased. They're just going to check if you're in the right plan. And if you are, then they will let you know. If you're in the wrong plan, like 90% of all seniors are, they are going to put you in the right plan. So call the number on the screen or go to the special website they've created for us, askchapter.org/insider. I'm going to put that in the description of this video and in the comments. I'm going to pin it in the comments. Fill out the short form and then they will reach out to you. So if you don't want to call, fill out the form and then they'll reach out to you. These are the people you'll be talking to when you call them. They are real licensed advisors that can help you with your Medicare needs. Chapter is A+ rated with the Better Business Bureau, tons of 5-star reviews, and they can help you save $1,100 a year. In today's world, that is not chump change. So call them today or fill out the form in the description and they will be happy to help you. Now, let's get back to low-income seniors. I know that I have been seeing in the comments that a lot of you are disappointed that the president has not really put a lot of money in your pocket in terms of Social Security increases, because most of the things that are in the big beautiful bill in terms of the deductions apply to high or middle income seniors. Well, there are 3 proposals, and if you've been watching my videos all year, there are 3 proposals that I have been talking about that are in front of Congress that the president is looking at, and Congress, people across the aisle, Democrats and Republicans, have been behind these 3 bills that I believe, for that reason, have a high chance of passing this year. And so if you're a low-income senior and you feel left out or you feel left behind, you feel crushed by all the cost increases that are happening with inflation, with groceries, transportation, rent, housing, utilities, well, there is hope, because these 3 bills that are actually bills that have names on them in Congress can really bring real relief to seniors this year. So I'm going to talk about the first one, which is the Social Security 2100 Act. I think that is the most important bill President Trump can pass for seniors on Social Security, especially low-income seniors this year. So what is the Social Security 2100 Act? Well, it is a bill designed to lift seniors that are at the bottom out of poverty. So if you're currently getting less than $1,000 or even a little over $1,000 in Social Security benefits a month, according to the federal government, you are actually living in poverty. So the bill, Social Security 2100 Act, will put your Social Security benefits at 125% of the Federal Poverty Act. Now, the federal government releases a chart every year that shows who they consider to be living in poverty. So if you're a senior that is getting about $1,000 or $1,200 in Social Security benefits, you are living in poverty because, according to the government, an individual making less than $15,000 is living in poverty. And so the idea is to put your Social Security benefits, if you are getting the minimum benefit, is to put it at 125% of the limit that the government considers as poverty. So what does that mean for you if you are a senior getting $1,000 or $900 or $1,200 in Social Security benefit? It means that you're going to get about a $660 increase right away. So you're going to go from $12,000 to $18,000 if you were getting $1,000 in benefits every month. So that is how significant this change is going to be if the Social Security 2100 Act is passed this year. And as I mentioned, this bill has bipartisan support. So there are people on both sides of the aisle in both chambers of Congress, the House and the Senate, Republicans and Democrats that have lined up behind this bill. That is why I firmly believe that this is probably the biggest change that the president can make in terms of Social Security this year. And it will be bigger than the $6,000 tax deduction that I just talked about. It will be bigger than the Social Security Fairness Act that people got in terms of increases, because this is going to lift about 30% of seniors out of poverty right away. So that is the Social Security expansion 2100 Act. Now, the next bill that I think can pass this year, probably the lowest hanging fruit, is the Social Security Expansion Act, because it does two things that are currently a big problem. The first thing it does is that it would increase your benefit by $2,400 a year. It means that every senior on Social Security, disability benefits, SSI, SSDI is going to get a $200 increase a month. Now, if you think that is not a lot of money, well, it's because this bill has been sitting and being bounced around in Congress for the last 3 years. And I think this is the year that it is likely to pass. Now, it was $200 3 years ago. And I think that $200 probably has been eaten by inflation. They should probably increase it to $350 or something. But the point is that the Social Security Expansion Act would increase your Social Security benefits and disability benefits by $200 right away. See, I'm already giving you an increase by $200 right away. So you get $2,400 in Social Security increase to help you with how much inflation has chipped away at senior benefits the last few years. And here's the truth: inflation has not caught up, or your Social Security benefits has not caught up with inflation over the last 10 years. That is a fact. Each year, the real inflation and what you get in your cost of living adjustment, there is a big gap there. And that is why, if you feel that you can never catch up, if you feel that price increases are always eating at your Social Security benefit, is because inflation is rampant and your cost of living adjustment has not caught up to that. So by passing this Social Security expansion bill, it gives you $200 increase right away, and that is supposed to help seniors put more money in your pocket. The third bill, which I think is a no-brainer, and I think that Congress should really pass this bill, because it's actually has consequences for the very long future, is to do something about your cost of living adjustment. Now, each year, a lot of seniors have to wait till October to hear how much Social Security benefits are going to be increased the following year. Now, over the last couple of years, that increase has been a disappointment. In 2024, the increase was 3.2%. This year, 2025, it was 2.5%. Now, that is a problem because everything else has gone up higher than 2.5%. If you think about rent, if you think about egg prices, if you think about grocery prices, transportation, utility. I mean, in the state where I live, we got our utility company is sending us a massive increase, about 7.5%, up to 20% in some cases, in increase in electricity bill. And so, if you're a senior citizen and you're getting a 2.5% increase in your social security benefit, but your electricity bill is going up by 7, 15, 20% in some cases, that's a big problem. So, what can be done? Well, there are two things. The first one is to change how Social Security cost of living is calculated to reflect the true cost of expenses that seniors are dealing with. Because the current method does not fully reflect or fully look at all the costs that seniors are facing. And that is why it is always behind the real cost that seniors are experiencing. So the bill before Congress is to change how Social Security cost of living adjustments are calculated. And then the second part of that bill is to then give you a 3.5% minimum cost of living adjustment each year. It means that your cost of living adjustment will never go below 3.5%, regardless of what's happening with inflation. And in years of high inflation, you get more money. And so these three bills together, the Social Security 2100 Act, the Social Security Expansion Act, and this bill that fixes Social Security cost of living adjustment, you put all of them together, and the average senior would likely see, if all of them are passed, a minimum of $350 to a maximum of $850 for those who are going to get the Social Security 2100 Act increases. So those three bills together can drive real change and put real money in the pockets of seniors who are low income on disability benefits that have been waiting for something, have been waiting for an increase, have been waiting for a change that will benefit you. These are the three bills that would do it. And I believe that the rest of the year, there is a big push to put these bills across the finish line for seniors that are in low income. So that is the three bills that I am excited about, that I'm going to be talking about a lot, because I think that the more you guys make phone calls, the more you are in town halls talking to your congressperson or your senator and letting them know that you are aware that these bills exist and that they need action, the more it is likely that these bills will get to the finish line. Now, you may think that, well, that's not going to do anything. Well, the more we make our voices heard, the more they take action. And you may think that your voice alone is not enough, but it is, because a lot of things have happened this year that seniors, a lot of us created content. We told you about it. You called your senator, you called your congressperson, and they listened. And I'll give you two examples to show you why your voice is important. The first one was when they tried to take away seniors' ability to call the Social Security Administration and make certain transactions over the phone. Remember when Elon Musk and Doge came, they tried to take your phone privileges away with the Social Security Administration by moving everything online. Well, we did a video about it. A lot of other people did videos. A lot of news organizations reported about it, and seniors made calls and they backed off. They backed off completely. The next thing is the Social Security overpayment thing that I talked about. They were going to take 100% of your check if you were in an overpayment situation. And we did a video, a lot of other creators did a video, and you guys made a lot of noise and they backed off from 100% to 50%. Now, 50% is still a lot, but it's not 100%. And so your voice is important. And you may not think that they're listening, but they do if enough of us make phone calls. So let's talk about Medicare. Medicare, there are a lot of changes that are happening this year that you should be aware of, especially since open enrollment is around the corner. What are the Medicare changes that you need to be aware of? Well, I mean, Medicare has been around for a long time. Since 1965, it's for people who are 65 plus. Over the years, it has been increased to do more things. So people with disabilities can now get on Medicare. People that have end stage diseases can get on Medicare. And when the Affordable Care Act happened in 2010, it also expanded Medicaid to a lot of people. So here's what's happening. So Part A, obviously, of Medicare is funded by payroll taxes, and Part B is funded by premiums. So if you make more money, you pay more Part B premium. The minimum is about $185. But Medicaid is funded by the federal government and states, with the federal government contributing between 50 to 78%, depending on the state. And then when the ACA, the Affordable Care Act, expanded Medicaid, it was also a joint cost sharing between the federal government and the states. So I'm explaining that as background before I tell you the changes that are happening. So for Medicaid, federal match for Medicaid expansion is going to drop from 90% to 80%. So that's going to put a lot of pressure on states. So if you are both on Medicare and Medicaid, your state may drop your Medicaid plan because now the federal government is shifting from matching 90% of, providing 90% of Medicaid funding to 80%. Now you may think it's just 10%, but that 10% is a lot of money for states to pick up. So if you or somebody in your family is on Medicaid, they need to pay attention to all the things I'm about to talk about, because states are going to get 10% more in terms of their responsibilities, and states that do not have the money or do not want to spend that kind of money are just going to drop people from Medicaid. Now, there is also penalties. States that provide Medicaid coverage for groups that are no longer eligible are also going to face penalties. But the biggest change that is coming to Medicaid is work requirement. If you are an able-bodied adult without children, you must work 80 hours a week, a month, or be in a job training program, or volunteer for 80 hours in order to get Medicaid. And now you have to do that until you're age 65. The only people that are exempted are 65 years old, disabled, or parents with children under age 15. Now, Medicaid and ACA subsidies are now strictly limited to citizens. So if you're a citizen, you probably continue to get your ACA subsidies. But for other people who are non-citizens, who are even legal residents, are going to lose some of those benefits. And then you have to expect frequent eligibility checks. So states must conduct more frequent eligibility checks to make sure that those who are on Medicaid are eligible. So if you are currently on Medicaid and on Medicare, expect that your state will be sending you paperwork every 6 months for you to fill out in order to prove that you are eligible. And if you lose your benefits because you did not fill out the form correctly, they are not going to go back and pay for things that you've already, been billed for. So healthcare services that you have gotten while you lost your benefits, it's not going to be covered. So you have to stay on top of this because things are about to get really, really tight. Now let's talk about ACA market changes. They are going to shrink the open enrollment for Affordable Care Act enrollment from November 1st to December 15th. It used to be 8 weeks. It's now going to be 6 weeks. And then you are not going to be automatically re-enrolled. Enrollees must actively re-verify every year. So they are not just going to roll you over every year like they used to. You have to verify your eligibility. And here's the most important part. Applicants must complete all paperwork before receiving premium subsidies. There is no longer a 90-day grace period where it used to be that they will cover you for 90 days while your paperwork went through. That's not going to happen anymore. And then the cost sharing only available to those with income between 100 to 250% of the federal poverty level. So they are limiting how many people can enroll and how many people can get the subsidies. Lastly, let's talk about Medicare changes that are coming. Only U.S. citizens are going to be eligible for Medicare going forward. Green card holders who are permanent legal residents and other legal permanent residents will lose eligibility unless they become citizens. So even if, you know, you are a legal resident, you've paid into Medicare, and you're eligible because you have the credits, you have to become a citizen and finish the last part of your immigration paperwork in order to be eligible. And you can no longer buy into Part A. It used to be that legal residents can buy into Part A if they don't qualify through credits. Well, you can no longer do that. And non-citizens are going to lose access to the extra help program that is available for low-income seniors. So those are dramatic changes that are going to happen with healthcare that you need to pay attention to. If you know somebody that's on Medicare or you're on Medicare or Medicaid together, forward this video to them because they need to hear what's happening and they need to be aware of these changes because there are significant changes that can have serious consequences. So if you like what you hear so far, hit the like button, hit the subscribe button. If you are new here, I am glad that you're here. Thank you for being here. Let me know your city and your state in the comment section. And if you are a regular and you watch my channel often, thank you for your support. Now, I have an announcement that is coming up in next week about a new group that I'm forming to even help seniors even more. So stay tuned for that announcement because I think that's going to be exciting. I'm going to be able to get into more topics to be able to help seniors on various things that I have not been able to cover on YouTube or on TikTok or other places. So stay tuned for that big announcement. And thank you for hanging out with me on this Sunday evening. I hope you have a great evening, a great night wherever you are. And I'll see you tomorrow on another live. Thank you for watching.